Welcome back, Alpha Hunters. Okay, we got a new week, new video for your stock, my plan. So let's dive right in. The stock we got for today is KHC, the Kraft Heinz company. Many people probably do know what this company is. It is a food conglomerate. They have a lot of different brands, obviously Kraft and Heinz combined. With that being said, let's try to figure out how to best make money from KHC. And one of the reasons why I am covering companies like this that are very reliable companies that have no problem making money, they're always getting used, is just the uncertainty that we have currently in the marketplace. So this is going to be another one of those good quality companies to where it's like, hey, I know this company ain't going bankrupt. So let's look and see what we can find for making money. I do like to start by looking at the long-term price history of the stock, and since they merged back in 2015, that is when these new stock got listed. KHC, Kraft used to be KRFT, I think, and we can see that it did pretty good after the IPO, and then it had about 3 years of selling from 2017 to 2020. Has since then bounced. So it has changed the trend of this sell down we had for the 3 years or the past 2 years, and it has now come and kind of, come into the support area or former resistance area, like right in that area where it was formerly a resistance right here for a little while, and then it got above. Now we're kind of like right above that. So this leads me to look at this pretty positively, as we could potentially be getting in on a nice little pullback here on a longer term. And if we were gonna get in on a pullback, do we want to buy shares? You could definitely do that. Currently trading at 34.76 or about that area is the time we're looking at this. So it's not a bad area to potentially be buying some shares. As we look here, really even on the short term, we have another little line right about there where we have a little resistance. So we've got a little channel action going on right here. So this isn't maybe even a channel that you could trade potentially, buy at the lower end of this channel, sell at the top end of this channel going forward. That's not a bad way to kind of go about it, but I would prefer to do something a little bit better with options, where you could do bullish strategies down here. So you could sell some bull put verticals, you can buy some bull call verticals down here, and then on top you could actually do some bearish positions, bear call verticals or bear put verticals, that kind of thing. So you could do very much an iron condor or condor type play, butterfly type play here. So we'll just go look and see what kind of things we can find with options. Well, what could potentially be the best play? Butterfly play might not be bad because the 35 strike is kind of like right in the middle. So we'd have to see how the frequency of the options, the intervals. And another thing to kind of note here then on the stock also is, if it starts getting it up above this channel and it breaks this high, this thing could really start climbing in price also. So that is another way to kind of play it, is if it gets above this channel, you could be a little bit aggressive up to potentially this 45 point area, like about right there or so, and then expect probably a pullback, and then it would probably continue higher. If it got above that 45 point area, I would look for the continuation higher. So let's look at the broker, as that is kind of the basic breakdown of what we can expect out of the stock. And the cool thing about Kraft Heinz, they do pay a dividend. It is going to be 40 cents roughly, right? That's the past 2 dividends have been 40 cents per share. So that's not too bad. It's a little bit better than, 4% annually. It's also there, for if you do want to own the shares, or if you do get put some shares, you at least, and you wind up holding it for a while, at least you'll be able to collect some dividends, that kind of thing. So go back to a weekly. I'm going to stay on the weekly chart. So let's go ahead and look and see what we can get into. So the stock's currently trading a little bit below 35, and we have a range between 34.5 and 38. We're looking at, okay. I want you to leave a stock in the comments below, and I'll come up with a trading plan. Okay, so let's look at Khc Options. Now, the first thing I noticed, they have weeklies, which is fantastic. I love some weeklies. It gives us flexibility on the near term for where we can get in and out of positions. So that is fantastic. So I'm going to open up this near term. Now, I think I did notice actually when I was looking at the daily. So that is another thing to note. Earnings, they do have earnings tomorrow as of me making the video. And by the time you guys see this, and by the time and it'll probably be in the morning for February 16th. So my guess, so you probably, by the time you see this and are able to get into positions, the earnings will already be out and have affected the stock. So you won't be able to put on a position before the earnings, okay? Now I'm gonna check right here in the broker because the broker is a little bit more accurate than TradingView on when the earnings are gonna be. So yeah, earnings are gonna be February 16th before market, and I'm in Central Standard Time, so that's why it's CST there. So that is just something to keep an eye on. It's just earnings. Earnings are always a good thing because those are catalyst events. So what we can look at, it's kind of hard to judge the prices on the options that expire this week because the earnings are baked into the option prices. Because I'm looking at this 34.50 and I'm looking at this 34.50, and I'd like to sell this one just because it's 3 days away and it's nearly all the value of the one that expires a week later. So I would like to sell these, right, if you could, but they do have earnings baked in. So that is a little bit of an issue for depending on whatever strategy you're doing, okay? If you were to do a strategy like the wheel on this, I would sell these near term. But since you guys won't be able to get into any positions before earnings, I tell you what, we're not going to factor that into this analysis. And we will look at doing not these weeklies, okay? You know, 'cause that's not really fair to you guys to get in on potential positions and that kind of thing. So we got some pretty good options. Every 50 cents is the strike interval. So that's fantastic. That definitely leads me to believe we can do some butterfly type activities here. And the 34 or 35.50 might be the midpoint. Let's see if we drop this down a little bit, 39, 30, 33 or so. Okay, so let's say it's 35.5. Let's look and compare doing a wide ranging butterfly, and we would want to do it. If we would want to do a butterfly, we're going to want to sell the two middle point ones. So that would, for us, that would be the 35.50s, and we would buy potentially a 38 for a put and buy a 33 for a call. So let's look and see how we can do that. So we want to buy so we're going to buy a 33, right? We're going to buy a 33 strike call, and then we are going to sell the 35.50 call, and then we're going to sell. Then I'm holding down control. That's why you're seeing the numbers pop up over here. That just lets you know that I'm holding down control. So then we'll sell that 35.50 for the call and put. That's why you see the down here 35.50 -1. So you also see it here, sell, call and put, and then we're going to buy that 38 point strike. So that is 250 away. That is 250 away. Okay, so we have a butterfly set up here. Now this is actually an iron butterfly. So we are mixing up calls and puts. So we will look and go analyze the trade. And the cool thing you notice is we have a pretty wide ranging profitability area here. Anywhere between 37 to 34-ish, roughly. So that's pretty good. That gives us plenty of range by next Friday, right? Because we are looking for February 25th. So as long as it would end above this point, basically, of yesterday's candle and below, basically somewhere up here. So as long as it would end anywhere in between there, we'd be good. So our peak profitability would be around about 150 or about $145 or so, and then our max loss could be potentially 105. So this is a pretty wide-ranging trade to put on, but is there a better kind of risk rewards for potentially this kind of setup? So I'm gonna note this real quick that, you know, our max reward divided by max risk potentially make 40%, right? The other way we can look to set this up is potentially doing an iron condor. So what we'll do now is we will spread out the calls and puts, the ones that we're selling, and maybe let's go a little bit lower on this put that we're selling. We'll go down to 34.50, and the call, we'll raise that one up to, we'll do 36.50. So we got a 1.5 between the puts and a 1.5 between the calls. So let's go ahead and analyze this trade and see what we get. Now it's a little bit more higher likelihood to work kind of trade. So the risk reward's not going to be as good because the probability is a little bit more in our favor, right? So we're looking to potentially make a $66 gain, and the most we're risking is $84. And I think I messed, yeah, I did. I think I told you this was a 38% reward. This is a 138% reward. So you're looking to double your money and a little bit better for that risk reward on those butterfly type orders. Okay. So for this one though, we are looking to make 66, risk an 84. So we take 66 divided by 84. Potentially looking to make about 80% for a reward to risk. Okay, not horrible, but it's pretty good. You know, especially for the probability of how this would work out. You know, we're gonna lose money anything below 33.80 ish, and then anything above 37.20. So 33.80 is going to be way back down here below this pivot from Monday, which I don't think it would be a problem. And then anything back above 37 would potentially start to lose a little bit of money. But anything in the middle, I mean, you get to realize the full gain. So that is kind of a nice point about that. And the other strategy I would potentially look to do on this is just doing the wheel strategy. And the cool thing about doing the wheel strategy on stocks like this is I don't care if I would get assigned the stock, because I'm just looking to collect the income off of just selling the options, right? So one of the reasons why this company, I would say it would be okay to do the wheel strategy is because I'm not worried about this losing 95% of its value, or even, you know, 50% of its value, or 40%. You know, it might have a hard time or a hard period or something like that. It might go down, but it's a quality company. They make a lot of food products, condiments, that kind of thing. So the wheel strategy would be something really good. And the way I like to do the wheel on strategy on companies like this is to sell as close as I can on the near term as I can. So I would sell this 34.50 put. I would just go ahead and sell this one, right? So you would sell this option for 79 cents, right? About 10 days out, you would sell it for 79 cents. And if it expired worthless, you just go to the next week, right? You just go to the next week, you just go to March 4th in this case, and you would sell then the next weekly option. And if you want to know how much you're going to be bringing in every week, it's about 75 cents or so, right? Earnings are inflating this number just a tad, and they're also going to come down a little bit as we go further into the week. So anywhere about 70 to 75 cents is what you can bring in per week until you get assigned the shares. And then once you get assigned the shares, you just flip it around and you just sell the covered calls. And here's the thing about, and I'm going to cover a whole new video about how to really properly run the wheel strategy, and where a lot of people leave out some key tricks to making sure you don't actually lose money running the wheel strategy, because very possible to lose money running the wheel strategy. But what you can do is you never really want to sell a covered call, or the call in this case, below where you get assigned. Okay, now that's just a high level tip. There's a little bit more caveat to it I'm going to cover in another video, but this is where you would just keep selling the 3450 call strike, and just keep selling it until the shares get called away. You know, maybe maybe the stock kind of just flutters back down here into the lower 30 area for a couple months, and you just keep selling the 3450s, man. Just keep collecting that income, wait for the stock to come back. You know, they call away your shares, but then you go back to selling then the puts on KHC. But that's what I love about this company, is they have weekly. So you can do this every week. Just bring in another, you know, $80, $70, 75 bucks a week, 80 bucks a week, you know, depending upon, you know, the price level of the puts. So this is something I would highly recommend doing on KHC, as if you do wind up getting put shares for several months, you know, they do pay dividends, so you'll be able to collect that income. And then you just go to selling the covered calls, right? Because when you sell a put, it's going to be a cash secured put. Just sell it. Now, I'm not really worried about the value of my capital in KHC going to zero, or going to bankrupt, or going to $10 in this case, so losing 66% of its value. I'm not worried about that at all. And I would say, if it actually got back down to the $20 area, I would actually be putting more capital in, right? If it got down to this low back in 2020, I would put more capital in. Absolutely, I would put more capital in down here, because, I mean, this is the pandemic crash. This is a food company. Food companies on discount will get bought up. And this is a food company on discount. I think it's on pretty good discount. But the wheel strategy on this kind of company would be very, very good. But the cool thing about KHC is that they do have weekly options, so you're able to do this every week. Every week, okay? So definitely use that to your advantage. Sell those options every week until you get put shares, and then hold on to the shares, and then just hammer and sell that same strike that you got put shares, but just sell the call side until you get the shares called away. Now, another little thing, I will say this real quick, is if the stock winds up dropping kind of far and there's not much value here, right? If it drops like a couple bucks and all you're really getting here at the 34.50 strike, if that's where you got exercise on the put side, and all that's really there is like 10 to 12 cents, well, then go a little bit farther out in time. Maybe go like a month. There we go. So if you go out to like about a month later and you go to that 38 strike, well, you still, you can get maybe like 25 cents or so. I would still try to hammer the near term as much as possible, but if there's really nothing there, just go farther out in time until you get to, until you can find something of value that you're willing to sell, right? That you're willing to sell. So if you can find a 38 strike that maybe selling at like 25 cents, 30 cents, then do that. 30. So somewhere in here, you could probably sell these for like 30, 35 cents. This 38 out at the beginning of April. So that's just an idea and different way to kind of manage your time on selling calls or puts, that kind of thing. So if you do this, you'll probably go in and out of owning the shares since you're doing this in a channel, which is fine, but collect the most value you can. Okay, that's kind of the other point, is collect the most value you can. The butterflies are pretty good. Just realize that the max reward is going to be at the center point, which we were looking at selling the 3550 strikes, right? So which is like right here in the middle. So if it did end around that 3550 area, then that would be the most where we can collect our highest reward potential. Is it likely we get there and we can collect that max reward? Not really, which is why I kind of do like doing iron condors and that kind of stuff. But I just wanted to give you guys some flexibility and different kind of ways to set up trades around KHC. But a quality company, wouldn't be worried about it going down in value. and selling the weekly puts, right, on this stock for, say, 75 cents. 75. I'm going to deflate this number a little bit just because earnings are into these numbers of just a tad. So I'm going to deflate what you're probably selling that for normally on a week. So if you sold that for 75 cents and you're obligated to buy it at 34.50, that's a roughly 2% a week of income. So 2% a week is kind of a game changer, right? Because so 2% a week, and you annualize that, times it by 52. It's 113% reward in a year. So it's definitely more than a doubling your account, and that's just doing a low risk trade setup on KHC, on Kraft Heinz Company. If you did appreciate this breakdown on KHC, give this video a like, and let me know down in the comment section what strategies you would potentially look to do on this company. Alrighty, take care, Alpha Hunters.